Congratulations, you had your offer accepted on your first property. Now, typically there's a financial contingency period structured into your offer, so you have about 7 to 10 days in order to shop around for the best mortgage rate for you. Now, typically lenders look at three primary things when they look to see how much money they're willing to lend you. The first is your credit score. Anything above 720 is considered excellent, and anything worse typically yields you a higher APR rate for your loan. Second is what's called your front end ratio. Now this is your mortgage, expected mortgage, with all the taxes, insurance, things bundled in, divided by your gross monthly household income. Now, as we discussed in our last video, typically we try to stay to about 28%, which means you don't want the mortgage to be more than 28% of your gross monthly household income. And then you have something called the back end ratio, which is your debt to income ratio. Most lenders consolidate all the different debt that you have, whether that be student loans, credit card debt, and your future mortgage, and divide it by your income. Normally they try to stay under the 43% debt to income ratio, but it really depends on the lender that you're using. These primary factors are what's used to figure out how much money lenders are willing to lend you. First, you're gonna wanna start off with a big name company as your baseline. RocketMortgage is the largest lender in the United States, so they typically offer some of the most competitive rates. I'd highly encourage you to follow the link below to get a rate from RocketMortgage and use this as your baseline as you're negotiating with different lenders. If you have an American Express Platinum card, there's a promotion going on right now where RocketMortgage will give you $2,000 in statement credit if you choose them as your lender. Second, you're gonna wanna shop around for the best lender. Now this is such a cumbersome process, and typically, once you apply for one lender, you're gonna get a flood of calls from different lenders. So feel free to pit them against each other. Don't just have them match whatever loan you have them beat it. And consistently send different loan offers to other lenders in order to get the best possible price for you. At the end of the day, securing a loan is purely a financial endeavor. Sometimes lenders offer something called a discount point, which is essentially prepaid interest that you pay up front, represented as a percentage of the loan itself, and it will reduce your APR rate if you purchase these discount points. Now, as you can see in this example here, as you purchase these discount points, it reduces both your monthly payment and the APR rate. However, as you can see on that third column, there's a break-even point. Because you're putting more money up front when you're purchasing this loan, it will take you longer to recoup that savings. Now, if you hold for the entire 30-year period, you'll see below how much money you save on these loans. However, if you're likely to refinance in the near future, you want to avoid discount points to the maximum extent possible. And currently, mortgage rates have tripled in the last year alone. Try to stay as close as possible to that 0 discount point range. Feel free to pit these lenders against each other. Send them loan offers that you're getting from other lenders in order to get the best possible rate for you. Third, you're gonna wanna compare and contrast different loan offers. You're gonna need to do an apples to apples comparison, so make sure that you have the same number of discount points and the same time horizon when you're comparing and contrasting different loan offers. Now we're gonna walk through what a loan offer looks like, and we'll compare and contrast a couple loan offers that I've received so you can see in finer detail what this looks like. So first, we're gonna walk through a loan estimate that I received from Wells Fargo. I redacted a lot of the personal information for obvious reasons. So this is a 30-year loan. It's a purchase at a fixed rate, and it's a VA loan, which is also why you see the interest rate as low as it is. Now, I know I got incredibly lucky timing the market at near bottom. However, most mortgage rates nowadays are around 5.25%. The loan amount is shown here. The monthly principal and interest number is shown here. And it also includes the estimated taxes, insurance, and other assessments, so my total monthly payment is around $3,300. It gives you an estimated closing costs, an estimated cash to close based on how much money that you agree with the lender you will put down. And this is the section you really want to pay close attention to, which is the closing cost details. I had 0 discount points, so you don't see any percentage of the loan. There's services that you cannot shop for, like the appraisal, the credit report, and in my case, the VA funding fee. There's services you can shop for, like the inspection, title companies, and a variety of other things. There's different taxes, some prepaids that are in Section F. Then you have the initial escrow payment at closing. some other, which is the title owner, and the total other costs are something you want to keep in mind, along with the total closing costs. So when you're looking and starting to compare and contrast these offers, you want to make sure you're paying attention to Section J here, this total closing costs. Now, we're going to show you an example of two loans side by side as you're comparing different loan offers. First example here is going to be from Axos Bank. So I had a loan amount of $126,000 for a purchase price of $168,000. It's a 30-year loan, fixed rate, conventional, and for most investment properties, you have to put about 25% down. There's an interest rate of 3.125, monthly principal and interest of $540, and a total payment per month of $756. So as I'm scrolling through here, I'm looking at what the estimated cash to close is. I'm trying to determine what the loan costs are. And in this case, even though it has a 2.875% of loan amount, which is the points here, there's a lender credit later on because I actually had the points removed altogether. As you can see here, the estimated cash to close is about $45,000. So now we will bring up the second example here. The second example is going to be from Navy Federal. It's the same sales price, $168,000, loan amount $126,000, with the down payment of $42,000, 3.125. However, as you see here, the housing payment is a lot higher than the other one. So at first I thought this was a little bizarre. I'm looking at all the different fees that are coming along, and there's one massive realization that I had. And if you caught it, kudos to you. Right here, loan term 180 months. They were only able to offer 3.125% at a 15-year rate. However, as you saw with the other loan, Axos was offering this same rate at a 30-year period. In fact, I couldn't find any other lenders that could possibly come close to this price. And that's how I knew Axos Bank was the best lender to pick. Now we're going to walk through another example, and this is of a refinance that is really neck and neck, and it's hard to make a decision between. So the first loan here is going to be from RocketMortgage. This is a refinance, so I already own the property, but I was taking a loan out for $100,000. The interest rate was 3.125%, monthly principal and interest, looking at the estimated taxes and insurance, estimated closing costs around $4,500, cash to close, which means cash to me because I'm the borrower of a refinance, is $95,493. In this section, I'm looking to see if anything is alarming. Everything looks good thus far. And then I received another offer from Wells Fargo after I sent them this loan estimate. As you can tell, they got near exactly what I got from RocketMortgage, a 3.125, monthly principal and interest identical. However, the slight variation here is going to be the estimated closing cost, which is only at $4,006, and the cash to close, which is the cash to me as the borrower, at $95,994. So as you can see, the amount of cash to me with RocketMortgage is $95,493. However, with Wells Fargo, it was $95,994. Now, $500 over a long period of time really isn't going to make too much of a difference. But when you have different offers that are so neck and neck like this, it'll help you make a better determination if you're looking at just financial cost alone. So for that reason, I elected to choose Wells Fargo as my refinance lender. So after you compare and contrast and determine the best lender for you, you're going to want to lock in that rate so you can have that same exact rate up until the closing date. At the end of the day, this is purely a quantitative decision. When you're purchasing a home, it's a qualitative decision in the sense that you're looking for a lot of different factors, how the home makes you feel, how it's going to fit with your family. But for the loan itself, it's all about the dollars. It's a quantitative decision only, so don't let the lender trick you into some sales tactic with customer service or easy to pay platform, because at the end of the day, it doesn't matter. So if you like this video, stay tuned. In the next video, we're going to be talking about more steps on closing on a home. Hit subscribe and comment below and give me feedback so I can better tailor these videos to meet your needs. Thank you, and I'll see you around.